Welcome to Impact TV, the corporate venture video series that showcases the top corporate investors in the world. Today, I'm joined by Dong Soo Kim from LG Technology Ventures, and we're including an audience of Kaufman Fellows today. Dong Soo, how are you? It's great to connect.
Fine, thank you. I'm really honored to be here. I'm really looking forward to it.
Well, let's see. You and I got a chance to connect in Tokyo at the Global Corporate Venture Conference. That was a great opportunity to connect with, I don't know, 150 or so attendees at that, mostly corporate venture groups from international markets. And then back home, we got a chance to connect for dinner with a few other corporate venture groups. How are you? Are the GCV events and other dinners like that? Is that how you're mostly collaborating with other corporates? How often do you get a chance to connect with other corporate investors?
Yeah, so GCV is a very large event where you get to meet a lot of, almost every corporate venture capital CVCs out there, right? It's a good venue to meet new people, but I also really appreciate a smaller gathering like the one that you organize. You get to meet other CVCs more intimately, and so all that is good. But at the same time, we do also maintain a good network of other CVCs that we've co-invested in the past, and also, that just try to maintain a good relationship with them. So it's all good. I mean, I really do enjoy meeting other CVCs, and also, we are welcome to co-invest with all of them. So it's all good. Mhm.
Before we talk about sort of your journey at LG and some of the priorities there, you spent a little bit of time at Samsung and had some extraordinary success there. Can you talk a little bit about sort of the time at Samsung and sort of, your journey through Samsung and some of the progress and then your transition to LG and how that all happened?
Yeah, sure. So I had a little bit of a very, I would say, a gradual entry into CVC. So I started doing R&D at Samsung. So after getting my PhD, I joined the Samsung, doing R&D on the telecom side. I actually was developing fiber optic components and started there, but I really wanted to get into the business side of things. So from there, I moved to technology strategy and then technology alliance. And that's when I started, getting introduced to potential R&D partners from the CVC unit, and that really is something that I really wanted to get into. So I convinced the head of the CVC unit to take me on, and so I started doing CVC work starting 2005. I've moved back out to Silicon Valley late 2009, and so had a very good run at Samsung. Did of some I was very fortunate to do some very good deals, and which led me to so Samsung eventually promoted to manage 4 offices: Menlo Park, London, Boston, London, and Tel Aviv. And then the LG came along and asked me if I wanted to set up a new CVC and run it. So here I am.
Well, in my background information, if it's accurate, I think it was quite a successful run at Samsung. You and your team, 30 investments, many of which were acquired or went public. And did you identify some patterns that sort of has served you well now at LG with regard to? I mean, we oftentimes talk about big markets and great teams and really finding product market fit as a seed and early stage investor. Were there certain patterns or things that carried over from Samsung to LG that have stuck with you throughout your professional career?
Yeah, no, I do believe that CVC does have a definite advantage over just the regular VCs. For example, like in terms of doing technical diligence, you can rely on the technical team, right, who doing research and development in certain sectors, and they're real experts, right? And also, your parent company can also be potentially a very good R&D partner or a potential customer and all that. So again, you can definitely add value to the startups. And also because of that, other VCs will introduce you to some good deals for them because they know you can add value. So I think that made things a little bit easy when I was doing deals because again, I mean, we had to just make sure that the company had a very good financial path because technical R&D and all those things were done by other experts within the company. So that's I think is has been quite advantageous in terms of doing deals. And again, I mean, we in LG we have the same model, right? When we have a company, then we always think first of all, I mean, for technical data, we rely on the R&D guys, but also think about how we can add value and accelerate the growth, right? In multiple forms, right? But mostly through partnership with LG, and that I think it just improve our chances of funding successful companies.
Was there one driver that really catalyzed LG getting into the corporate venture game? Was it
Yeah.
access to innovation? Was it
Mm-hmm.
what were sort of the key reasons why LG decided to sort of step up its game and obviously
Sure.
build out the team with you as a leader and
Yeah. Yeah.
start looking at accessing technology in a new way?
Yeah. So again, I mean, a lot of business that LG is in is not I mean, many of the business is not a very fast growing business. I mean, home appliance, consumer electronics is pretty. I mean, it's hard to find big growth, right? Within those big themes, though, there could be other new businesses that LG could take on to create new markets and also new businesses. So there's a lot of interest in that. There's always also a lot of interest in finding technology partners who can either do joint development or supply with some key technology that would make LG's products better. So always there's been quite a bit of interest. How to get into the CVC market, that's where LG wasn't doing too well. I mean, before each of the company was investing out of the balance sheet. It is a model that, at least in my opinion, usually doesn't work too well, right? It's for multiple reasons, right? Longer decision making and just not having a dedicated investment professional work on the investment and all that. So LG realized that it wasn't working well. So that's when they decided, yeah, we do need a dedicated CVC team that operated a bit more autonomously and managed funds to provide continuity, right? Investing out of balance sheet. Also, the problem is depending on how the parent company is doing, you might not, that those allocated budget may go away, right? And that builds a very bad reputation, right? Because all startups and also other investors want, a CVC unit that will continue to operate and invest. So because of all that, so they did a lot of benchmarking, including Samsung, Intel, Qualcomm, you name it, and then decided, yeah, I mean, it's a dedicated CVC model is what they wanted to pursue, and then they recruited me to come and run it. So this all happened during 2018. So it's almost been 5 years now. Wow.
And now 400 million under management, mostly a focus on seed and early stage in artificial intelligence, mobility,
Yeah.
advanced materials, next generation display, mobile and 5G. Are those the key areas from an industry sector standpoint that you're focused on?
Yeah. So again, we look at all areas of innovation. By the way, the fund has grown to about 480 now. We raise additional funds from other companies and we invest mostly Series A or later. We don't do as many C. Of course, there are exceptions, but yeah, we tend to, because of the size of the fund, we like a little bit later stage, right? So, but in terms of the technology sector, obviously, we want to. I mean, we really have two missions, right? One is try to look for technologies that might have synergies with our existing business units, right? So, especially things like lithium-ion batteries, consumer electronics, materials, and all that. But at the same time, we are also asked to look into potential future technology or business models. So we have some flexibility into looking into the future and investing in really, I mean, even very future-looking ideas like even quantum computing, for example, and things like that. So that kind of covers all the areas that you mentioned, AI and everything else. But because we have quite a bit of flexibility, I mean, there's a lot of opportunities out there that we can look into.
Since 2016, we've been investing in artificial intelligence companies applied to security and digital health and finance, and really looking at how AI is being applied to various industry sectors. I think the world was caught a bit by surprise by all the generative AI, Chat GPT efforts. over the last few months and the level of adoption there,
Yeah.
disrupting internet search and looking at other areas of content creation. It'd be interesting to get your view on that particular industry trend.
Yeah.
How are you thinking about generative AI?
Yeah. So again, I mean, AI has been, we've been looking into it since the inception, right? We did a number of AI deals, right? Both AI tools like H2O.ai and then also companies try to optimize manufacturing using AI like Machina Rocks. But I think generative AI all of a sudden became a very hot topic in the last year or so. I mean, I think it developed so fast that it just caught a lot of people off guard. Personally, I think, I mean, like any AI, like any AI is a fantastic tool, right? And basically, it's continuous extension of computing that now it allows computers to do a lot more things, right? With generative AI, yeah, of course, you can just create both languages and images based on just just very without knowing how to code or without even knowing anything about AI. But I think so there's all these general models are being developed very fast. People are very interested in it and using it. But at the end, in order to be more useful, people need to refine the model, right? To be really good at things, right? Obviously, people now they're all impressed how like generative AI is giving wrong answers and all that. I think that's because I think that's just the wrong way of looking at it. Is because if you want generative AI to be good at everything, then that might take forever, right? But if you fine tune the model to be really good at something, then you can. I mean, I think you can start deploying that in rather short period of time. So I think that's where it's going. I think there will be a lot of startups refining the model to be really good at certain things, and so and it just gauging by how fast things develop, this will come rather quickly, I think, seems like, right? So
Kind of piggybacking on your point, there's some great information out there around the OpenAI mafia spinning out of OpenAI and carving it up by industry sector, and so it's clear that that is part of the future. Circling back to LG's investment process, there'll be some startups that watch this video and want to understand sort of how you take investments through a process from initial introduction all the way through, kind of final investment. Can you talk a little bit about that process? And is business unit sponsorship required? What does the investment committee look like? Just from first introduction to funded investment in a startup, what's the typical process?
Yeah. So when we crafted the process, we wanted to make as little less, I don't know, not be disruptive to the typical venture capital process, right? Usually where it causes a lot of disruption is, when things get delayed on the final decision making and everybody's ready to close, but the corporate still needs to get approvals and things like that. So what we did is we try to move the internal approval process very early in this investment stage. So once we source the deal and when we do when you have the first just face-to-face meeting and then once we know enough about the company, we send the deal to people in Korea who will review just based on the merits of technology and strategic fit. Once they provide consent, then the process moves entirely into LG Tech Ventures hands. So we then operate just like any other venture capital. So we do the financial diligence, and if you're leading the deal, then we'll negotiate and structure the deal and all that, and then do the closing. So again, so this way there are less surprise, at least for the startups, because we don't have last minute like somebody in the business unit turning down the deal and all of a sudden that and nobody likes that. So that's how it's designed. So usually the initial process can take a longer time if there's a technical diligence involved, because but otherwise we've also in deals that we don't need such extensive technical diligence that we've closed deals within 6 weeks. I mean, so that's, I think we can move almost as fast, at least in terms of the LG Tech Ventures process, we can move as fast as any other VC.
as any VC or any corporate VC
Yeah,
that I've
yeah,
seen.
yeah.
Definitely. Yeah, I can see that. And
Mhm.
then the founders at these startups, I mean, they always like to hear sort of perspective from investors and corporate investors, VCs and corporate
Mhm.
investors on sort of traits and qualities that you look for. Oftentimes we're looking at, obviously entrepreneurs that have, great conviction around what they're doing. They have proprietary
Mhm.
access to,
Yep.
information about a problem that they feel like they can solve. They're active
Uh-huh.
listeners. They're really good team builders. They're good at sales. We're sort
Yep.
of looking at, some of those elements, particularly at the seed stage,
Mhm.
where there's a lot to be built. How do you
Mhm.
think about sort of founder characteristics or traits? Because as you know, we're working with these entrepreneurs oftentimes for a 4, 6, 8 year period,
Mhm.
and so we got to know and like them and respect them and appreciate their skills. What's
Yeah.
your sense of the traits that you've seen or that you target maybe
Mhm.
during your Samsung days or at LG
Yeah.
now, the
Yeah.
patterns of success?
Yeah. So other than the typical, strong founder with great team and technology, all that, I personally like to invest in companies that is solving a problem that a startup can solve, can do well, instead versus somebody like LG, a big problem that LG can do better than startup. So, you know, I mean, for example, right? I mean, if you were trying to build lithium-ion battery or some sort of battery technology from scratch, that's a big problem, right? And I'm not sure a startup is, especially, I mean, right now where there are a lot of entrenched players in there that is a thing that startup can do well. But if the startup is developing a certain proprietary material or certain battery management technology or diagnostic tool, right? I mean, that's something that a startup can be more creative and move faster to develop certain solution and which can and also just can afterwards can work with big companies like LG to accelerate entry to the market. So I tend to like those kind of solutions rather than just try to be the next $10 billion company or whatever, right? Uh, uh, so I think, yeah, I mean, and also I tend to stay away from like real like fads or I mean like things like, for example, NFTs or cryptocurrency. We stayed away from it mostly because uh, really it's uncertain how that'll play out. I think there's a lot of mistakes will be made, and then we are seeing some of that before it really becomes a solution that people adopt. So we tend to yeah, just focus on more on manageable problems that startups can solve and can do well.
Manageable problems meaning just so I learned from you things that maybe require a little less capital and can be executed in shorter durations of time versus
Mm-hmm.
the big projects that obviously are
Yeah, yeah,
massively capital intensive
yeah,
and take, and could take a decade. So do I
yeah,
have it right with regard to
yeah.
capital intensity and time?
Yeah. I think that's right, and I think in the past, I mean, we've done a lot of investment that fit into that theme that worked out really well for us.
Yeah, yeah, makes a lot of sense. So
Mm-hmm.
we've had, as you may know, we've had an opportunity to invest at the seed level and then have many of our portfolio companies secure follow-on rounds of financing from corporate venture groups. In fact,
Mm-hmm.
we've had follow-on investments from Intel and Zoom and Baidu and
Mm-hmm.
Yamaha and SK Hynix and a number of others.
Yep.
How are you working with traditional venture funds? Is there anything unique that you're doing? Is there more just like a typical sort of VC to VC relationship, or anything special that you're doing as you look to work with outside independent venture firms?
Yeah. So again, I mean, we do like to co-invest with other VCs and CVCs. I think everybody brings in a different value to the portfolio companies, right? So obviously, we like VCs mainly because they usually have a very good deal flow, right? I mean, a very well networked. Also, because they tend to provide continuous capital through multiple stages, right? Other CVCs, some CVCs will just don't have that, right? Some CVCs don't do as active follow-ons as other VCs, right? So So again, that in that regard, the VC helps quite a bit. Also, managing the portfolio of VCs has to be a bit more hands-on and provide more help in terms of the network and all the resources that VCs has to have. So that's again a big plus. But also there are plenty of other CVCs that bring a lot of value, right? In terms of additional technology validation or potential customer or network. So again, I mean, it really served me well by encouraging other to co-invest with other CVCs and at LG. Again, we have the same philosophy. We do welcome working with other VCs and CVCs, and that's why we also try to actively network with other VCs and CVCs to build that relationship.
Well, you're well positioned. Interestingly, we always get enthusiastic about working with corporate investors because oftentimes there's market insight about real opportunities in large markets. Sometimes there's access to a channel of customers. Obviously, the credibility, if you have LG on your cap table, it's sort of, the implication is industry endorsement and validation. So as a startup, it helps you get more customers and investors. That's all helpful. Can you talk, you mentioned Series A, focus, early stage investing. Can you talk a little bit about ticket size and sort of your investment style? Do you like to lead or follow? Do you take a board seat? Can you kind of walk through that part?
Yeah, so other than the fact that we do a little bit later stage of series, usually Series A or later, $1 to $10 million, right? But otherwise, we try to be very flexible, right? So we can lead deals, follow. When we lead, we do try to sit on boards. Otherwise, we usually ask for a board observer seat because that's how you stay more connected with the company and also provide more I guess. If you want to advise the company on how to work with the LG, for example, or try to introduce them to the right business unit, it helps quite a bit when you're at least engaged as a board observer, right? So we do that, but yeah, I mean, it's just very flexible.
And ticket size and board role?
$1 to $10 million.
Okay.
Yeah.
And you flexible with regard to board role? Or are you oftentimes playing the lead role and taking a board seat, or mostly board observer roles?
So no, we do sometimes lead, and then when we do take board seats, but I think about a third of the deals that we have board seat. Otherwise, it's mostly observers. Yeah.
Okay. And then last question before I take you into the rapid fire portion of the program. Any key technology trends that you are really excited about, in the next couple of years? I mean, we're looking deeply at the corporate metaverse and some of the themes around that we think that's an interesting area. We're looking deeply at generative AI and how that might disrupt search and content creation and those things. Any trends or key technology areas that you're really leaning into this year, or that you expect to kind of play out in the next couple of years?
Yeah, so those two areas that you mentioned, right, generative AI and metaverse, we've been looking at it since 2-3 years ago. Generative AI more so this year, but metaverse, we've been looking at it for about 2-3 years. And I think those are trends that needs to be watched. I think it's potentially a huge impact. Other than that, we are very involved in transformation of mobility. So two big trends there, obviously electrification, which LG is very central in that role. Right. I mean, LG Energy Solution is the largest manufacturer of lithium-ion batteries outside China, and also in the automobiles becoming more and more autonomous. Right. I don't think fully autonomous vehicle will come soon, but there will be partial autonomy, right, in certain situations like highways and so forth, that will allow also the passengers to do a lot more things in the car, both in terms of infotainment or all that, and also there'll be a lot of it's just a lot of opportunities out there, I think. So those are areas we're very active on, and obviously AI and those even AI will play a role in that sector too, right, in one form or the other.
We just got a couple minutes left, and I want to switch to the rapid fire portion of the program and ask you a couple of personal questions, if that's okay. Sure. Just as you look at your own career, you've had extraordinary success in the corporate venture world, and I'm wondering if there's any routines or patterns that have that you've adopted
Mm-hmm.
over the years to ensure sort of professional success? Anything that you sort
Mm-hmm.
of attribute your success to over the years?
Yeah, so all the the basic of trying to stay healthy, right? Work out and all that, and get enough sleep and all that. But I I've always been naturally a very curious person. So I've been, always asking, how does this work? Why? In terms of both technology and different business model. I think that has served me really well. Try to just understand things a bit better. Obviously, I can't be an expert on anything, right? Because of the nature of this business is very broad, right? But at least if you are curious about how things work, then that tends to go a long way in terms of understanding the business and then trends. So I think that's what helped me the most.
That's interesting. I
Hmm.
yeah, that's I think that it's always interesting to me to see, reporters actually make their way into the venture industry, and they're really good at
Hmm.
asking questions. And
Hmm.
to your point, that curiosity does fuel
Yeah,
initiative and questions,
yeah,
and it's that's actually
yeah.
that's
Yeah.
interesting perspective.
Yeah. As an investor, also you're very, very fortunate situation because the startup CEOs are eager to teach, right? And when you ask a question, they want to show all the great things that they know and they're doing. And again, I mean, I think it's very fortunate that we are able to do that on a day-to-day basis.
hmm I'm a big fan of life by design, sort of proactive living and starting your day in kind of
Hmm.
a way that sort of catalyzes an
Yeah.
optimistic mindset. Is
Yeah.
there anything that you do in the morning to sort of kickstart your day and get into the
Yeah.
right frame of mind?
Yeah. So every morning I spend about 15, 20 minutes working out. Just I don't, I mean, I just do it at home, right? Just but I think if you make it intense enough, that goes a long way. You don't have to spend hours in the gym, at least I don't think, to get fit. I mean, if even 15 minutes of just pretty intense workout, then that gets the day going, and you're up to speed and all that. So I think that has over the years helped me to stay relatively fit and so yeah.
And then last question for you, favorite podcast, online publication, anything that you
Mhm.
find yourself drawn to, TED Talks, anything that you'd want to mention that was inspiring
Uh-huh.
or educational?
Yeah, so that's more ad hoc. So I do get newsletters from different organization, including not just GCP, but also, even law firms or all the VCs, right? Which tends to, like, if you click on it, it tends to lead to different podcasts and information. But I think that's for me, it's a better starting point than just do a regular podcast, which tends to have a lot of topics and a lot of different things, right? So that's
Well, great. Well, just as we wrap up, I want to make sure and say thanks to my colleague Pat Bumpus for all his help with production on Impact TV. Thanks to my co-chair Alessandro Santo with the Kaufman Fellows, and Dong Soo. Thanks to you for allocating a little bit of time in your day to educate us on the exciting things that LG is working on. Really appreciate it.